Good morning, this is Giuseppe Basile. I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @FibStalker nickname. Good morning, today is Friday, November the 30th, 2012, and it's 1:15 p.m. Italian time. Italian time zone is GMT+1. In this video, I want to do a review of two forex pairs. The first one is the US dollar versus Japanese yen, and the second one is the euro versus the Aussie dollar. And I'll show you that these two pairs are very technical, and there are setups on them going on at the moment. So I think there are some opportunities to profit from these pairs. Starting from the US dollar versus Japanese yen, this is the weekly chart. I want to check the last measured move we had, and this is also identifying resistance in this pair, and the resistance is located at the moment in the 85.70 area. It has been tested somehow at the beginning of 2011, and this is still active. Recently we had actually short failing to sell price in the 80.55, and as we see, price went above 81.70. But at the same on the same page, bulls were unable to defend their positions. As we can see, the 79.90 was not observed, was not defended, and price moved below the 78.80 area. So when this happens, what we have a wedge, and this could be a wedge of lows, or could be an inversion figure. We don't know that, and only price can tell us. So at the moment, I'm just going to highlight this for you. This is something we have to keep in mind when bulls and bears are unable to defend their position. That's exactly the definition of a wedge, which is an indecision pattern. Moving to the daily chart, though, we see a completely different situation here, because basically we had a violation of shorts on this time frame, and it means shorts were unable to hold this 80.65 level. There was a resistance level. As you can see, at the beginning of November we had a reaction lower, so we had bears selling at this level, but they were not able. Eventually this level was superseded, and they were not able to defend their level. And I've been observing this move higher here, a support level in 79. And as you remember from my previous FibStalker view on currencies video, which I share only with my newsletter subscribers, I identified two levels here. One was the 81.40 level, first target, and the second target was 82.60. As you can see, they were both hit, and I was expecting the second level to be hit also on November the 21st, when I posted a trading plan for this pair, and you might want to review that, because in that example I indicated this anchor, and I said we are going to get support from this level to the high that this pair will print. And indeed we had support in 81.70, 81.80, and these trays here, this long setup has two targets at the moment, 83.30, and the next target would be at highs at 84.10. so any opportunity to get long this pair should be taken with a stop below 81.51. A more aggressive stop could be currently could be the 82, I would say the 82 level. That would be a more aggressive stop. But this pair is actually behaving as expected. I want to remind you that in this pair we have resistance in the 85.76. So I wouldn't. I would be very careful at the moment. This pair is trading in extensions, so the setup I've showed you on the daily is actually this one. This should bring price to 84, and then we could keep trading in extensions here, so choosing from this level to this level, or the high that we are going to get, and this could actually bring price into this 85.76 level of resistance. I'd like to move to the euro versus the Aussie dollar here. As we can see, this pair reached the highs in 2009. That's not a case, because this year we had that incredible bubble on commodities. So that bubble started to burst a little bit here, and I think Australia is not out of the tunnel at the moment, out of the woods, because there is still a bubble on commodities, and you can see that when you have freshmen, high school kids coming out from the school and taking 100,000, 200,000 job in commodity extraction. So I don't want to argue on this, but clearly there is something wrong in the from an economic point of view. So this could be the first sign of this bubble bursting here, and as we can see, the euro is reinforcing against the Aussie dollar, but I want to show you on the weekly chart. I want to show you the full sequence of measurement, because this instrument is very technical, and I suggest you keep an eye on it. So we had this first traditional with two targets, 185 and 177. We got to 177 and went through it. So the next measure move was from lows, because it was an extension to lows, and as we can see, we had resistance in 180 with first and second target hit again. The price kept moving lower, so again, I mean, it kept moving in extension. So the euro lost again against the Aussie dollar here, and again we had this resistance level in 155, and again first target hit, and finally second target hit here. So on the weekly time frame we have the next measured move lower, and as we can see, we had price and program trading responding to this further level of resistance at 127. Now we have to understand whether we are going to move above the 130.36. Should this happen, all these move lower will be negated. So it means that there will be a violation of this trend lower, and when that happens, we know that there is the potential for price to retrace to the all the way back, which would be 163. If this seems strange, or this seems extreme, we have to remember how this pair moved in the past. So that's not extreme, then that's not fantasy, that's actually possible, and we will see what is going to happen here. So, but we need price to go above 130.36, 130.40, because if that does not happen, it means that bears are still defending this level. So let's move on the daily chart to try to understand where we are, and if we can have some operational indication and signals. So in this move higher, we had a very good support, and this is the 122.70 area, and this area has a target in 131.10, and this would be above that 130.40 level that we indicated before. So if this long setup completes on the daily, then we will have the violation of the and we will have the violation of that level we indicated, and so we have the potential to move into the 168 area. But again, we are getting ahead of ourselves here, and the setup is there, the long setup is there to get to 131.10, but price is still at resistance at the moment. I'll show you the resistance. Price needs to move above this area, needs to move above 125.70. That's very important. Again, the long setup is there. It's a resistance in 124.90. the long setup is there, and within this move higher in the last 3 weeks, we have some traditional setups as well. And as we can see, we have this long setup which is aligned to the larger weekly long here, having target in 124.60, which was it actually today in the morning during the Asian session. And there is the potential for this pair to continue higher. So if it keeps moving higher to 125 into 125.50, which is the second target, then I would trace this next setup long here if price keeps moving in extensions. However, we could actually have a full retracement. We could actually have a full retracement, so it's also possible that price could come back to test the 123.60, 123.50, and this would be supported by this 20-day moving averages turning higher. So at the moment we have to wait and maybe take a position, half of the position in 24.80 if we come back after moving up into 125.60, and the other half you could take long at 123.60. I hope this is interesting and useful. If you have questions or comments or suggestions or criticism, just you can come to my website. I'll be happy to answer your question and listen to your comments and suggestions. Thank you very much for your attention, and look forward to see you soon, and thank you. Bye bye.